It was a sure bet. The Reserve Bank was going to move today. The most stunning part of the RBA's announcement is its launch into quantitative easing. It's what we've seen the US and European central banks do since the GFC to stimulate their economies. So, to the details. The cash rate has been dropped from 0.25 to 0.1%. The RBA will spend $100 billion buying government bonds over the next 6 months, and the Governor said he'll do more should it be needed. The rate at which banks can borrow from the RBA has also been cut to a stunning 0.1%. These extraordinary measures come despite the RBA lifting its growth and employment forecasts. Here's Rachel Papazoni.
It's been almost a decade since interest rates were cut on Melbourne Cup Day, and never before has the Reserve Bank fronted the media after such a decision. But an extraordinary year requires an extraordinary response.
At its core, today's decision reflects the Reserve Bank Board's commitment to do what we reasonably can with the tools that we have to support the recovery of the Australian economy.
The bank has cut the cash rate from 0.25% to the new record low of 0.1%. And in moves still new in Australia, it's ramping up quantitative easing. That involves pumping $100 billion into the economy by buying government bonds. And it's also cutting the rate on cheap credit to the banks, which should lower borrowing costs for households and businesses.
Another aim for the RBA is also to lower the exchange rate. And the exchange rate, a lower exchange rate does make our exports more competitive, and that helps to lift economic activity as well.
Mark and Verity Riessen's lender didn't pass on the full rate cuts in March, but they hope this time will be different.
I'll be looking either to negotiate a lower interest rate or looking to another lender.
They're banking on the extra saving after Verity was put on JobKeeper.
We could end up going back to one income, so to have a lower interest rate would be immensely helpful.
But while rate cuts are great for people with a loan, they're not for savers like Ankita Gangaramani.
It's really impacted me in terms of the amount of interest that I gain on the actual savings that I make. So my money isn't exactly growing.
She's seen her interest rate with one of the big four banks shrink since the start of the pandemic.
When I started on with them, it used to be a percentage, then it fell down to about 0.9%, and now it's falling even further.
She's now earning just 0.5% interest on her savings. While interest rate cuts are what consumers feel the most, it's the Reserve Bank's huge injection of cash that signals the pressure our economy is under. For more than a decade, it's refused to be drawn into a game of manipulating interest rates and the currency. But with rates cut to the bone, there's no alternative if we're to remain competitive in a global economy.
The RBA could certainly up its bond purchases. There are other policy measures available, potentially taking the cash rate into negative territory if needed. There certainly are options open to the RBA if they do think that the economy needs more stimulus.
Which means the history books could be rewritten again.